Hey guys, welcome back to another episode. In this video, we're going to show you our advanced support and resistance strategy that you must learn in order for support and resistance to actually work. So a lot of traders use support and resistance, but you'd be surprised that many traders actually use support and resistance completely wrong. Make sure to hit the like button, as it allows for our team to continue to produce more free YouTube videos. Let's start with the support and resistance basics. So what is a resistance level? When you look to the left, you notice price go up before it suddenly stopped in its tracks, changed directions, and went downwards drastically. This tells you that for whatever reason, this area is of interest to buyers and sellers, because once price got to the area, buyers decided to close their long positions and sellers decided to open new short positions. And that double action is what is required to trigger a drastic move in the opposite direction. A quick note. Whenever you hear us refer to buyers and sellers, we are referring to the big guys in large institutions who have the power and leverage to actually move the market. So, because there is buyer and seller interest at this area in the past, there might be interest at this area again once price returns to this area in the future, which presents trade opportunities. Now what you do is you draw a rectangle zone from where the last reversal occurred and stretch it far out to the right. This zone acts as a reminder to yourself to look for trade opportunities once price reaches this area, such as right here, which presented a short trade opportunity. So what is a support level? When you look to the left, you notice price go down before it suddenly stopped in its tracks, changed directions, and went upwards drastically. This tells you that for whatever reason, this area is of interest to buyers and sellers, because once price got to the area, buyers decided to open new long positions and sellers decided to close their short positions. And that double action is what is required to trigger a drastic move in the opposite direction. You again draw a rectangle zone from where the last reversal occurred and stretch it far out to the right. This zone then acts as a reminder to yourself to look for trade opportunities once price reaches this area, such as right here, which presented a long trade opportunity. So what happens when price breaks through resistance? Price breaking through a key resistance level shows you are in a very strong uptrend with heavy bullish momentum. This old broken resistance level then transitions into becoming a new support level and presents pullback long trade opportunities to trade with the strong moving uptrend. So what happens when price breaks through support? Price breaking through a key support level shows you are in a very strong downtrend with heavy bearish momentum. This old broken support level then transitions into becoming a new resistance level and presents pullback short trade opportunities to trade with the strong moving downtrend. Now here's a very important concept. Always treat support and resistance levels as wide general areas. The reason most traders fail at using support and resistance is because they expect picture-perfect looking key levels and picture-perfect trade setups every time, but this is often not the case. Support and resistance levels and trade setups will often look imperfect because the market as a whole is imperfect. So you need to learn to trade within these imperfections, or else you'll miss out on 90% of the best trades. So here are the 3 imperfect support and resistance types to look for. 1. Price can break slightly past a key zone before reversing, which is also known as a false breakout. 2. Price can come close to a key zone, but not fully touch it before reversing, which is known as an imperfect reversal. And 3. When you need to draw a very wide zone to capture all the wide swings and bounces, because you wouldn't be able to place a clean-cut, slim level. Now, there are actually many different types of support and resistance levels. Not all support and resistance levels are made equal. Different support and resistance levels have certain traits built into them that make them of higher quality. Let's now go through the different support and resistance high quality types and traits to look for. Type 1. A drastic steep reversal of price that moves a greater distance. Notice how once price got to this resistance level, you had a steep, sharp drop downwards, not a slow, gradual decline. And price moved a greater distance and not just a slight bounce off the area. Again, notice how once price got to the support level, you had a steep, sharp rise upwards, not a slow, gradual incline. And price moved a greater distance and not just a slight bounce off the area. From a price action standpoint, this shows that these areas are of high interest to the big guys, as they opened and closed large orders, which is required to trigger such steep reversals of price that move a greater distance. Type 2. Multiple reversals and reactions of price. Notice how at this key level, price reacted and reversed off of it on 5 separate occasions, which shows that this level is of high interest to buyers and sellers, as they took action at the level time and time again. Type 3. Swing highs and swing lows. These touches here give you your standard key level. These touches here give you another standard key level. These reversal points at the top here give you your swing high level, as it is the highest point that prices reached in recent time. Swing high levels are high quality because they represent areas where price is deemed very expensive, which results in buyers often choosing to close out their long positions at these areas. These reversal points at the bottom here give you your swing low level, as it is the lowest point that prices reached in recent time. Swing low levels are high quality because they represent areas where price is deemed very cheap, which results in buyers often choosing to load up on the asset as a value buy at these areas. Type 4. Acted as both support and resistance. Notice how this key zone here acted as resistance here and support here. Just like multiple reactions, it shows that both buyers and sellers took action at the level on many separate occasions and on both sides of the level. Type 5. Visually obvious. These are the levels that you can spot right away within seconds of looking at a chart. They are visually obvious and jump right out at you and are known as major levels. These small bounces still give you a level, but it is known as a minor level. The easier to spot and visually obvious levels are the ones everyone can see, meaning there are more eyes on the level, which results in more action takers at the level, especially the big guys. Type 6. Recently respected test. So finding this type of level requires 3 steps. Step 1 is to find the point where the key level originated. Step 2 is the key, which is to look for a recent reversal off the same level to show that it is valid and respected during this current time period of the market. Essentially, you are letting the market test the level to see if it is valid before you use it. Step 3 is your trade setup area, and you go into this trade with confidence, as your Step 2 recent reaction tells you that this level is still bringing in interest from buyers and sellers during this current time period of the market. Type 7. Psychological levels and round whole numbers. Traders like to take action at key levels that are also round and whole numbers, which is a psychological attribute. Psychological levels aren't an exact science, so treat these psychological levels as general areas. This is the Tesla stock. Notice how price reacted and bounced from the $400 psychological area. Notice again how price reacted and bounced from the $300 psychological area. Bounces and reversals off the $250 psychological area. Bounces and reversals off the $200 psychological area. And a reversal off the $100 psychological area. Type 8. Stacking high-quality types and traits together. Evidently, a lot of the types and traits we just covered will overlap with each other, which is a good thing. The more overlap there is, the higher the quality of the key level and key zone. This level at the top here is a swing high level. It has multiple reactions, a drastic move away, and is visually obvious. This next level here acted as both support and resistance, multiple reactions, drastic move away, visually obvious, and it had a recently respected test. This level at the bottom here is a swing low level, multiple reactions, drastic move away, visually obvious, and had a recently respected test. Now moving on to the next topic. Drawing support and resistance through applying wide zones. Before we continue, we want to hear from you. Tell us in the comments below right now what video topics we should cover next. Many of you have sent us messages asking us to cover news and current events, so we'll be creating those types of videos on this channel going forward. Let us know right now what else we should cover. As always, please hit the like button, as it allows for our team to continue to produce more free videos on YouTube. So you want to draw your resistance levels to this area above price. Using the traditional methods, This reversal point here is one level drawn. These reversal points here is another level drawn. These reversal points here is another level drawn. Now, the problem with drawing so many separate levels close by together is that it creates confusion and analysis paralysis, as you don't know which level to use for possible short trade setups. So what you do is, instead of drawing in all these separate lines, draw a wide zone instead that captures the entire area. And then you look for reversal price action in the general area for possible short trade setups. Let's show this again. These swing high reversal points draw a wide zone like this. These smaller reversal points draw a wide zone like this. These many reversal points draw a very wide zone. Then your swing lows down here, another wide zone. Let's show this again. This is the Snapchat stock. This is the Boeing stock. This is the MasterCard stock. This is the Walmart stock. So a question you probably have. How far back should you go to draw in your key levels? You always want to try to use recent key levels close to where you are currently, like these here. But now, once price breaks through the swing high, you have entered uncharted territory without any recent key levels in sight. This is then when you would zoom out and look a bit further back to see if there is a key level, which you have through this reversal point and level here. Once price hits the level, you had a candle color change and a bearish momentum candle, which means you can use this as an exit point or for a short trade setup. Now, moving on to the next topic. Imperfect trade entries inside of a wide zone. So this is your traditional picture perfect entry. Key resistance level, price comes up, candle color change at resistance, presenting a short trade setup. Key support level, price comes down, multiple long wick candles at support, presenting a long trade setup. This is an ideal picture perfect setup, but as you should know by now, trade setups won't always look this clean. They will often be messier, imperfect, and occur in wide general zones. This then brings us to the strategy of imperfect trade entries inside of a wide zone. So notice how these reversal points happen in the same general area, but not very close together, which means you cannot place a slim level, but instead need to apply a wide zone like this. This here is your long trade setup because of the following factors. 1. You are trading with the strong uptrend, which is clear through price breaking far above the key resistance zone. 2. New key support level with multiple touches. 3. Price enters the zone with long wick candles sticking out, showing a reaction. But it's not until you had a candle color change here that it shows momentum loss from the sellers and possible buying presence. Once you had an intraday trend change confirmation, you would look for a long entry point using our entry and exit strategy. Let's show this again. These reversal points occur in a wide general area, which then requires a wide zone to be applied like this. This here is your short trade setup because of the following factors. 1. You're trading with the strong downtrend through the lower highs and lower lows. 2. New key resistance zone with multiple touches. 3. Your trend line crosses in the same area. 4. Price enters the zone and reacts to the zone through shrinking candles, multiple candles with the wicks sticking out, and a candle color change through the red candle appearing. Once you have an intraday trend change confirmation, you would look for short entry points using our entry and exit strategy. This is the WWE stock daily time frame. Notice how these reversal points happen in the same general area, but not very close together, which means you cannot place a slim level, but instead need to apply a wide zone like this. This here is your long trade setup because of the following factors. 1. You are trading with the larger uptrend and heavy breakout momentum. 2. New key support zone with multiple touches. 3. Price enters the zone and your trend change confirmation came through either the break of the short-term trend line or the break of the medium-term trend line. Now, you can get into trades at an earlier, more secure, and more precise entry point using multi-time frames. So let's get into it. This is a trade we took on the pound Kiwi 4-hour time frame. Notice how these reversal points happen in the same general area, but not very close together, which means you cannot place a slim level, but instead need to apply a wide zone like this. This here is your long trade setup because of the following factors. 1. You are trading with the larger uptrend. 2. New key support zone with multiple touches. 3. Price then enters the zone, and you have an inside bar candle and multiple candles with the wicks sticking out. Now, our reaction does not equal a trade, as price can stall at the support level and still break through and trigger a larger reversal downwards. Because don't forget that this is still a moving downtrend. So you need to look inside of this candlestick reaction area, but on a lower time frame, to find any form of price action that signals a trend change from a downtrend to an uptrend. Let's pull up the 1-hour time frame and put it beside this one. On the left is the pound Kiwi 4-hour time frame we just looked at, and on the right is the pound Kiwi 1-hour time frame. This key zone here is this same zone here. The trade setup we identified here is this same area here. Now, when you look inside of the candlestick price action from the 4-hour time frame, but on the 1-hour time frame, you had a form of sideways channel pattern or as an ascending triangle pattern as well. Whichever one you choose to use, these price action patterns show that buyers are accumulating at this support zone. And once price breaks above the pattern and forms a higher high, the trend change is confirmed. And is when you would look for a precision entry point using our entry strategy and key tool. Now, here's a bonus technique. Place a trend line below the moving trend of your current long position, and if it breaks, you should know what to do next, if you're a WiseTrade member. Let's show this again. Notice how these reversal points happen in the same general area, but not very close together, which means you cannot place a slim level, but instead need to apply a wide zone like this. This here is your long trade setup because of the following factors. 1. You are trading with the strong bullish breakout momentum. 2. New key support zone with multiple touches. 3. Price enters the zone, and you have multiple candles with the wicks sticking out, showing price is reacting to the zone. So you need to look inside of the candlestick reaction area, but on a lower time frame, to find any form of price action that signals a trend change from a downtrend to an uptrend. Let's pull up the 1-hour time frame and put it beside this one. On the left is the 4-hour time frame we just looked at, and on the right is the 1-hour time frame of the same asset. This key zone here is this same zone here. The trade setup we identified here is this same area here. Now, when you look inside of the candlestick price action from the 4-hour time frame, but on the 1-hour time frame, you had a double bottom followed by a trendline break, which confirms the trend change from a downtrend to an uptrend, and is when you would look for a precision entry point using our entry and exit strategy and key tool. Now, moving on to the next strategy, which is imperfect trade entries past a zone. Price won't always reverse at a zone, but sometimes it will go past a zone before it reverses, which is also known as a false breakout. So this reversal point here gives you your key level. As price comes back, it breaks through the level. So how do you know whether this is a real breakout or a false breakout? You need to look for trend change price action, which you had through the lower high and lower low, and price breaks back below and presented short trade opportunities. If this was a real breakout, you would have a pullback retest of the level before breaking out upwards and making a higher high. Now, false breakouts are very effective to trade because all the breakout long traders got trapped. So once price reverses, all those long traders have their stop losses hit, which results in a massive bearish momentum candle like this being formed. Let's show this again. This reversal point here gives you your key level. Price breaks through the level, showing how strong the uptrend is. So you want to trade with the upwards momentum. Price then pulls back to your resistance, turn to new support level. You would a long wick candle react to the level, but no bullish price action, so no trade. Price then breaks past the level before finally a green candle appears, showing buying presence. Once you have an intraday trend change confirmation, you would look for long entry points. These reversal points give you your wide resistance zone. This can be viewed as two false breakouts, or this can be viewed as a divergence false breakout. Trend line below, and once it broke, trend change confirmed. These reversal points give you your wide support zone. Again, you had a divergence false breakout before a higher high trend change confirmation. Let's now bring in the usage of multi-time frames. This is the dollar CAD currency pair. These two reversal points give you your key zone. As price comes up, price breaks slightly through the zone. You're also at the right shoulder of the imperfect head and shoulders pattern. Now, to figure out whether this is a real breakout or a false breakout, you need to look inside of this area for any form of price action that signals a trend change from an uptrend to a downtrend. On the left is the main time frame you found the trade setup on, and on the right is the lower intraday time frame. This key zone here is this same zone here. The trade setup we identified here is this same area here. Now, when you look inside of the breakout area on the main time frame, but on the lower intraday time frame, you have a trend line placed below. And once it broke, you would take a short entry using our key entry strategy and tool. Now here's a bonus tip. Your target one would be this minor zone here. Now, if you want access to a ton of advanced content that won't ever be made available on our YouTube channel, go to wisetrade.com. Make sure to hit the like button, as it allows for our team to continue to produce more free videos on YouTube. Also, go follow us on our Instagram account @wisetrade to stay notified about a lot of big projects we have dropping soon. So thanks for watching, and I'll see you in the next episode.